technical analysis with the triple top chart pattern. In this case, even though there are 3 downswings relatively close and level to each other, there's an incline before and near the end of this relatively horizontal range to add similar characteristics to an ascending triangle pattern, leading to the failure of a triple top reversal. In any case, the range running through the 3 downswing points is still useful, mostly to reference resistance during this pause in the larger uptrend. Here's another variation to the triple top, sharing some features similar to an ascending triangle, except one that would be flipped horizontally, meaning it has quite a level upper boundary and a noticeable decline to the bottom portion. It could be said this decline represents additional bearish sentiment, but those upswing points can still be used to identify a horizontal range similar to a more rectangular triple top. Overall, there's still the characteristic steep drop below the lower boundary of this triple top. Then the entire range from 93 to 95 naturally sees downswing points form immediately after the pattern completes and well into the future. On this next chart, the downswing points have more variation, but are still quite level and aligned with each other. Like the first chart example, there is an incline, but it's not as significant on this one. There's a distinct break of the lower boundary for this triple top range, essentially with a large 3 methods falling candle pattern due to higher volatility when the bearish acceleration takes place below the lower boundary of this range. Here's a more compact variation of the pattern in a more typical rectangular range. In addition to the closing prices, even the wicks of candles are fairly horizontally level. Again, the pattern concludes strongly with a 3 methods falling candle pattern, breaking the lower boundary. A fairly compact triple top range with sharp and clear swing points to easily outline where the bearish reversal begins. Yet another triple top range sharing similarities to a failed ascending triangle. The lower boundary is again defined by the lowest upswing point. And notice this time, just before the pattern completes, there's a downswing point that isn't as closely related to the triple downswing points that form the main pattern outline, giving it a quality similar to the right shoulder of a head and shoulders pattern. And even with these differences, the upper and lower boundary of the triple top reversal form a range that remains highly relevant for a long time. For example, there are clear double bottom patterns forming around the range. Here's a fully declined triple top where the lower and upper boundaries are both declined. Basically like a small shallow channel rather than a flat horizontal rectangle. Over here, a clear M-shaped double top reversal that's in the same range as a relatively recent downswing to produce a more spread out variant of the triple top pattern. Here's another example with a closer look at its development. Naturally, it tends to be a bigger range, wider both horizontally and vertically. This spread out triple top is in more of a bearish continuation context rather than being the main bearish reversal. Also, despite the relatively wide range, these levels are still quite precise, as upswings and downswings neatly form around them. On to another case where a long-term downtrend has a bullish retracement that is ended by a triple top. This time it's a much more ordinary and compact rectangular horizontal range. There is more variation with the closing prices of the downswing points, but they basically line up together quite neatly when considering their upper wicks. Additional bearish sentiment is represented by the bearish candles that form each downswing point.